Hi, I'm Max Keiser. This is the Keiser Report as the world continues to implode financially. Stacy.
Max Keiser. Bailouts and currency wars are the two big themes for 2011 right here on Keiser Report, right?
That's right.
Well, the first headline then is just a number, 50.6. Yes, this is an image from Bloomberg.com, but it's referring to the number of years in percentage terms since 1800 that Greece has been in default or rescheduling its debts. And this is based on research from economists Ken Rogoff and Carmen Reinhart. So 50.6% of the time since 1800, Greece has been in default or rescheduling debts.
That's a lot of feta cheese.
Well, Max, so do you think this EFSF, therefore, and yet another bailout for Greece is going to do the job?
Not at all. Greece was played in this whole creation of the euro. We know going back to the beginning, they were seduced into hiding their debts. Goldman Sachs was involved in that as part of this drama, this Greek tragedy that's playing out now. The Greek people have been played like chumps once again throughout history. This is the role that best suits them.
Well, okay, so we're in another Great Depression, and one of the things they're trying to prevent, just like they tried to do at the first Great Depression, is they're trying to basically defend the banks and save the banks at the expense of everybody else. Defaults are not an option. And yet Greece will default. We know that. Everybody knows that. In fact, according to Bloomberg, there's a 50.6% chance that they will default soon because they have been defaulting for 50.6% of the time.
Yeah, the feta futures market right now is actually rising because of the demand for feta on the global markets will increase once Greece defaults. Get it on. You know, get back to making rope sandals, feta cheese, olive oil, and hosting big bachelor parties and bachelorette parties on those fabulous islands. Let's get back to what Greece does best. Party, party, party.
Well, instead of all of these bailouts, one option always presented is that Greece should just reintroduce the drachma, drop out of the euro. And we've presented that argument here several times from various analysts and investment advisors. But I want to turn to another investment advisor here who's advising her clients that, in fact, Germany is about to introduce the Deutschmark. And that's something to look forward to in the next days and weeks, she says.
Woohoo!
So this is Philippa Malmgren, and she says, quote, "The Germans will announce they are reintroducing the Deutschmark. They have already ordered the new currency and asked that the printers hurry up." So first, Max, who is Philippa Malmgren? She's on the board of Deutsche Bank. She's an advisor to UBS and Prudential, and she was in the Bush administration in the Economic Policy Department. She was also a member of the U.S. President's Working Group on Financial Markets, who are
now called the Plunge Protection Team.
Yes, they're often known as the Plunge Protection Team. They come in and rescue markets that are falling. They make sure the Dow rises, and presumably now the FTSE and the CAC and the DAX, all of the markets around the world.
That's right. Well, who was the first person on international television, in the media, in print, on TV, on radio, to make this prediction, to make this assertion that the Deutschmark would be brought back? Oh, that would be me. That's right. I predicted this because I know the mind of the German. And I know that the whole Euro project was a trick bag to reunify Germany under the umbrella of the Euro. And then when things went bad, as they inevitably would have to, they can eject themselves from the Euro. And there it is, the Deutschmark, and a superpower, Germany. .4.
Now, she doesn't give any specific evidence for the fact that they actually are printing Deutschmark at the moment, but she does look at various things happening regarding this crisis, which indicates to her that they are about to print the Deutschmark. And that is quotes from Joseph Ackerman, the CEO of Deutsche Bank, and also Vice Chancellor Rossler, who told Germany's Welt Daily there should be, quote, no limits to thinking of possible scenarios of how to end the euro crisis. In the same interview, he also said one of those possibilities, however, is not a further bailout after this $440 billion EFSF, European Financial Stability Fund.
I was the first And I hope those editors over there at Wikipedia, under the section Predictions by Max Keiser, on the Max Keiser entry, will make this adjustment. Yep, they're printing up these bad boys, and they're printing them up in size.
The other point where she says that she could see that they're printing Deutschmark is you look at what the Swiss central bank has done and the Canadian central bank statements that they've issued. So the Swiss central bank, we know for a fact, has introduced a currency peg. Immediately after that, the Canadians also announced that all the bad things we thought might happen are now happening, so we are going to maintain a highly defensive position. So she says they're preparing for the inevitable reintroduction of the Deutschmark, and therefore the consequent collapse of the euro in value. That's going to be the way which they get out of all these debts in the periphery European nations.
Ladies and gentlemen, entering the heavyweight ring, the Deutschmark in the currency battle of the century. It's got everything. Huge export market, low unemployment. They've got fantastic benefits for all. They've got a surplus in their unemployment benefits and their health benefits. A surplus!
She says, I would expect a major unscheduled speech from the president of Germany once it is decided to leave the euro. You could expect a European bank holiday, and then the devaluations will happen across Europe, across the eurozone, those that remain in the euro, and you're going to see, therefore, huge inflation. Therefore, all of the money, all of the new liquidity is going to go into, she says, gold, diamonds, agricultural assets, energy prices, and mined asset prices will rise. Default will reduce the debt burden and allows growth and inflation to return.
Hit him with the blitz! Sudden announcement. Look for it.
Now, of course, this is against the what others have said. Jim Rickards, who we've talked about, believes there's going to be a return to some sort of gold standard. Jim Rogers, who she also mentions in her analysis, Jim Rogers thinks the euro will survive and be stronger than the U.S. dollar. This is not what she sees.
Well, the Rickards idea of return to the gold standard is still in play under this Deutschmark reintroduction because the other countries will have to respond because this is a currency war. The other countries are simply not going to bow down and salute the Deutschmark and everyone's going to reference the Deutschmark. There's going to be a mad scramble. And ultimately, the Rickards end game is still in play. This is just another chapter toward that end play where everyone eventually decides that, look, let's stop World War III, the currency war. Let's go back to gold.
Another point that she refers to, Max, is this headline here from September 9th. Trichet loses his cool at prospect of Deutsche Mark's revival in Germany. So this is from Bloomberg, September 9th. As I said, Trichet, 68, lost his cool yesterday with a reporter who asked whether Germany should abandon the euro and return to the mark. He said, quote, I would like very much to hear the congratulations for an institution which has delivered price stability in Germany for almost 13 years, he said in an uncharacteristically raised voice. It's not by chance we have delivered price stability, he said. We do our job. It's not an easy job.
Notice, he didn't say no. You have to read between the lines. Stacy Herbert, this is a fantastic story that you are breaking for our international audience. Truly remarkable reporting. I am gobsmacked.
Well, in fact, this is Philippa Malmgren. She's the daughter, by the way. I looked her up because I wanted to make sure she wasn't a yes woman. You know, you never know these days. Everybody's a hoax. She's the daughter of Harold Malmgren, who was a well-known trade negotiator who served in the administrations of John F. Kennedy, Lyndon B. Johnson, Richard Nixon, and Gerald Ford. And when I looked him up, I also found that he's been in the news about another European-wide issue arising in the very same week, these last few weeks, and that's the Tobin tax. Now, all the governments of Europe are now agreed that they want a Tobin tax, which is a tax on financial transactions. The only one outside of this is the UK, of course, because they have the City of London and they don't want a financial transaction tax. Well, from September 27th, her father, Harold Malmgren, was quoted in the FT in an article titled, Long-Term Investors Would Benefit from Tobin Tax. And Harold Malmgren refers to the fact that so much trading is now high-frequency trading. And so long-term investors are disadvantaged, he says, because he argues that big financial institutions that operate HFT platforms try to buoy up flagging markets by well-timed surge buying of exchange-traded funds, triggering automatic buy responses from algorithmic trading models across the market. If true, this must create an upward market bias that will, over time, skew asset values.
Well, there's huge biases that are triggered by program trading and stop orders and sell stop orders and buy stop orders and cascading of orders and quote stuffing, and all this stuff could be minimized with the introduction of a Tobin tax, a tax on transactions, a fee on all transactions. And let me tell you something, Stacy Herbert, as a former broker on Wall Street myself, I can tell you that if they imposed a transaction fee on all these transactions and never told any broker, any banker, they would never notice. It's completely a non-issue. It reminds me of this club I go to in London, the Groucho Club. I've been going there for years, and I've looked at this little card on the table, and I've never read that card. Suddenly, last year, for the first time in years, I read that card. It said that every single meal I eat there, they add 1 pound of tax or surcharge that they use to feed the poor. I never noticed that surcharge in years and years and years. The same thing with every trader and banker in the world. If you give them a Tobin tax transaction fee and never tell them about it, they'll never notice.
Well, and the reason why high-frequency trading, what they do is they trick pension funds, big giant funds that manage our money, the little guy's money. They trick them into buying basically at an inflated price. So I want to have this one final headline here, Max. Class war, 52% say U.S. isn't divided economically, poll finds. So this is the Pew Research Center for the People and Press and the Washington Post. And they did a poll where they found that just under half, 48% of Americans, said that if they were forced to choose, they would call themselves among the haves, while only 34% said they are among the have-nots.
Well, this is exactly what you find in the Bowery or in the gutter of any major city. You know, the people who are living in the street, in the gutter, alcoholics, gambleaholics, degenerates, they really believe that they're getting over on the system. And this is the average American. They're degenerate, they're alcoholic, they have no health care, they're living in the street like bums. But when you talk to them about it, they're like, yeah, ain't America great?
Well, I don't believe that they're living like bums. I think they're living on debt, and they don't understand that that system is ending. And we've just covered this. If the Deutschmark is introduced, the euro collapses, the dollar, there's going to be chaos. And that whole system where they can think that they're part of the haves just because they have a credit card on which they could put their health care, on which they could put their bar tab, on which they could put these issues. They think they're living like grand life because they're able to afford a car, they think. They're able to afford health care. They think. They're able to afford a house. They think. But in fact, it's just on a credit card based on a currency system that is about to collapse.
Point taken. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
That's going to do it for this half, but stay there because we got much more coming your way. Hi, welcome back to the Keiser Report. I'm Max Keiser. Time now to go to London. Talk with Steve Woolf, city spokesman for the UK Independence Party. Steve Woolf, welcome to the Keiser Report.
Thank you, Max, and thank you for inviting me to your show. I'm really looking forward to being on.
All right, Steve Woolf, your party, UKIP, is calling for Greece to return to the Drachma. Talk about this.
Well, Greece has to return to the Drachma, Max, because it's in their best interest. It's in the interest of their people, and it's also ultimately in the interests of the European Union and its people. They're suffering at the moment, as we know. We have levels of unemployment for the youth around 18-19%. There's millions of people unemployed throughout the country. There's lots of people losing their businesses. There is a real sense that the austerity that the Greeks are giving to them is actually hurting badly. And the reason that it's hurting and having no effect for a positive future for them is because they're trapped within the economic prison of the European Union. If they were able to escape the arms of Barroso and the commissioners who want to keep hold of them and their assets, they will be able to take control of their economic levers and help themselves get out of this debt crisis.
Okay, Steve Woolf, let's talk about the ripple effects here, because the folks who are not against the haircut or the write-off or the return of the drachma, of course, are saying that the bond market would collapse, the Greek banks would collapse, ripple effect throughout the Eurozone. what do you say to this?
I think there would be some dark times ahead for Europe if either way. If we don't take and allow Greece to escape from this economic prison, then we'll see a long period of time where the European people have to pay for this massive debt. And we can talk about the EFSF and its extended bailout. I'm sure we'll go into that in greater detail. But if we do allow them, there would certainly be some form of ripple effect. But would that necessarily be as bad as the doomsayers of Christine Lagarde and the IMF and the European Union? I'm not so sure it was. What we're doing is when we're hearing them say Europe will collapse into a mess, they are trying to scare us into not doing something that we should be allowing Greece to do, which is give them their freedom. There's no doubt, and I'm sure you hear this all the time, that Baroness Ashton and her team of diplomats are wandering around Washington threatening that if the bailouts don't occur, then we will have 1930s-style unemployment and recession throughout Europe. There'll be doom, there'll be gloom, there'll be the rise of the far right. That, I don't believe, will happen. This is them trying to protect their jobs, and they're also trying to protect this creation of a country called the United States of Europe. The ripple effect will be there, but don't believe it to be as bad as they are trying to paint out.
Steve Wolf, can people point to Iceland and say that, well, you know, they basically defaulted, they took their medicine, 2 years later they're now growing? Is that an accurate comparison? And if so, why aren't more people making an issue of this and making that comparison?
That is a perfect example, as is also looking back to the days of Argentina and Brazil when they defaulted as well. They were given the opportunity to take hold of their economic levers. And let's look at the positive things that could happen for Greece. We know that they're indebted on a debt crisis with their bonds. If they were able to say we're out of sight of the European Union, they could take hold of their interest rates, they could look at their currency, they could take haircuts on their bonds of 60, maybe even 70%, they could devalue their currency at 30, giving themselves some leeway to 50%. This would encourage other businesses to come to Greece. Certainly would encourage those who are tourists from the UK going to Greece, if you've ever seen the prices in the holiday resorts in Greece at the moment. But also look at the very important positive factors of the Greece economy. Greece has assets, and some of those assets that aren't coming out into the public domain are their oil and gas reserves. We have received reports that only a few years ago, 7 Scandinavian companies were offering around 250 billion for the gas assets that are outside Crete, etc. Those are assets that could be used to help Greece in the future rebuild its country, but only if Greece was able to get hold of its own economic powers. It can't do it whilst it's trapped within the European Union.
Let's talk about the UK for a second, because the UK did not join the euro, and people are saying that they're insulated from the euro crisis. However, the banks in the UK own much of this toxic debt from continental Europe. And so what are the ripple effects, and how do they get into the UK? And what is David Cameron doing about it, if anything? Is he telling the people in Britain accurately what's going on here?
David Cameron certainly isn't giving the people of Britain the truth about the indebtedness that Britain is connected to the European Union. When you're looking at this bailout, we are having to pump billions into the IMF to support this. This is money that could be used to help the banks that would have to face some of the detrimental effects of Greece defaulting. We could use them to shore up the capital and increase the Tier 1 requirements of those banks. In addition, by being a member of the European Union, we spend around £55 million a day to the European Union. That money could also be repatriated back to preserve the economy of the United Kingdom whilst we're going through the bad times. David Cameron doesn't want to let the public know that we are contributing to these bailouts through other means, such as the IMF, and he doesn't want us to know the true effect of what would happen if Greece was to bail out, or the opportunities for Greece, because to do so would endanger this project of being in the European Union.
The crisis is unwinding in real time, and leaders appear to be paralyzed. Every talking shop leads to another talking shop. Their policy seems to just let this train wreck happen and then pick up the pieces afterward. There's no proactive policies whatsoever. And I'm sure that the pivotal country here is Germany. Let me ask you about Germany for a second, because on one hand, they have benefited by the cheap euro in terms of their export market, and it's the first or second biggest exporter in the world. On the other hand, if there's a huge consolidation due to a collapse, that'll most likely be run through Berlin. So they really are playing two sides of the aisle here. Is Germany, how do you see Germany in all this? As a kind of a hapless bystander to a calamity that no one saw coming? Or are they more behind the scenes orchestrating something here?
Well, I'm not sure that we can be safely certain that anyone's orchestrating this behind. I mean, I think you have to turn around to go to Horst Köhler, who was the former German finance minister, in 1992, when he said that the southern countries would not be bailed out by the northern countries. This is not what the euro was about. But actually, that is what the people of Germany believed. They never believed that their hard work or the taxes would be used to bail out any country that allowed themselves to get into substantial debt. They didn't also believe that we were going to have a country called the United States of Europe. So what you're seeing in Germany is a realization that for many of them, like many of us in the United Kingdom and the rest of Europe, have been fooled by a political class who have one agenda. If you take some of the polls that happened over the weekend, as UKIP have read and I've seen have been published, 48% of Germans now would start supporting a Eurosceptic party, i.e. one of those that believes they should get out of the European Union. But you have to ask yourself, why are they doing that? They don't want to see the danger of the bailouts affecting their country. They don't want to see their lifestyles affected in the same way. They know that if they put debt upon debt to build more debt, which is effectively what this new bailouts from the EFSF is. It's a country default scheme. It's a large Ponzi scheme of debt derivatives. They don't want to be part of that because they know ultimately it will be Germany that is on the line. Their lives are on the line and their businesses and unemployment could rise. They've seen it before. They don't want it to happen again.
All right, you talked about this Ponzi scheme, and of course, the global center of the financial Ponzi scheme is London. They've got the weakest regulatory environment, the most hedge funds, the most corrupt bankers. They're the ones who are really making a market in fraud most prominently throughout the world. And they have a stake in perpetuating this global Ponzi scheme and fraud. Otherwise, the entire city of London goes away, more or less, and they go back to being a utility bank of making simple loans and no more flashy Christmas bonuses or champagne parties anymore. Is David Cameron basically just completely in the pocket of the banksters at this point, and there's no hope for any accountability at all in the City of London?
Well, I don't think that David Cameron can be seen to be a supporter of the banks in the United Kingdom, or indeed the financial services industry as a whole.
But let me just cut in here for a second, because during the recent looting episodes in the UK, Cameron's out there castigating the looters, while at the same time he is petting and grandizing all of the looting bankers. He seems to be talking out of both sides of his mouth. I mean, either he believes in looting as a business model for his country, or he's against looting. He has to pick one or the other. The UKIP, I would imagine, has a position. What's UKIP's position?
Well, UKIP's position on the financial services industry in the UK is very clear. We must support one of our most important industries. Max, let's get some facts on this. Not everybody in the financial services industry in the United Kingdom are the rich bankers. There are 1.1 million people employed in this industry in places like Chester and Leeds, in Edinburgh, going down to Cardiff. These people are not earning the £1 million a year. They're actually earning safer salaries of around £20,000 to £25,000. These are the people that are going to get affected when Europe introduces financial transaction tax. We don't think about them. What happens here in the UK is we focus ourselves on about 1,000 to 2,000 seriously wealthy people, many of them employed by banks, some of them who have indeed done bad things, if we look at the ex-chairman of the OBS, for example. But that can't be applied to the whole of the industry as a whole. So UKIP is supporting them, whilst at the same time, we don't support those who commit blatant fraud, who go out and commit serious crime. And that's why when you look at the offences that were occurred by the looters in the streets around the country, is you can't allow that sort of looting to happen with the purposes that they were intended. It wasn't about a political statement. They were simply out to try and steal from shops. And that would apply equally.
Or give them a banking license and have them work at Goldman Sachs or Barclays or HSBC and boost the GDP of the UK, because it's a country built on banking fraud. But let me jump to a tweet I got from the Max Keiser Twitter account. This is from Mr. Canning, who asks, where does Steve see sterling going as the Bank of England with more quantitative easing, while the euro hopefully possibly takes a nosedive? So how does the Bank of England's quantitative easing program affect the pound going forward, as you see it?
Well, I think really what's going to happen is more affect not necessarily what quantitative easing does to the pound. It's really what's going to happen in the United States to the dollar. I suspect that whatever quantitative easing that we try and do in the United Kingdom isn't really going to have a great effect. We will see the potential of inflationary issues going down in the future, and we must be deeply concerned about that. But really, we're caught between other sides. It's really what's going to be coming out of the United States and what's happening in Europe. We're trying our best, but we're still caught within this economic trap and this danger that faces us from Europe.
All right, Steve Wolf, that's all the time we have. Thanks so much for being on the Keiser Report.
Max, it's been my pleasure. Thank you very much. Take care.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Steve Wolf. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.